Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so you are good. I am also good. So guys, from today we are going to start with the amendment lecture applicable for your examination, that is May and November 2025 examination. Now, for your examination, you know that Finance Act 2024 is applicable, and you know that 2024 was election year. So in election year, there was two finance bill, there was two finance act, that is one is the Finance number 1 Act 2024 and second is the Finance number 2 Act 2024. Now, Finance Act number 1 and number 2 both are applicable for your examination, and due to the Finance Act 2024, there are various amendment that is applicable for your examination. Now, guys, this amendment lecture is applicable only if you have not opted our classes for the May and November 2025. Suppose you already attended our regular batch or exam oriented batch for the May November 2025, then guys there is no need to check this lecture because all the amendment we already covered in the classes, so there is no need to watch this particular lecture. Now guys, what are the amendments that is applicable for your examination? So your first topic is your general tax rate. So guys, in case of general tax rate, there is no amendment as such, like whatever tax rate applicable for last year, that same tax rate applicable here. But guys, there is a change in the tax rate of the company. Now you know that in case of the domestic company, that tax rate is a 30%, but domestic company, if previous year 20 to 23 turnover is within the limit of the 400 crore, then domestic company, that tax rate is 25%. So guys, domestic company tax rate is 30%, but for domestic company, if turnover for previous year 20 to 23 is within the limit of the 400 crore, then guys here tax rate is at 25%. Last year we have for the last year, you know that we have to check the turnover for the previous year 21-22, but now for your examination, now your previous year is 24-25, because you are calculating income for previous year 24-25, then you have to check the turnover for previous year 20-23. If 20-23 turnover or gross receipt is within the limit of the 400 crore, then tax rate is at 25%, otherwise tax rate is 30% in case of domestic company. But sir, suppose that company is incorporated in current year only or in the last year. Suppose that domestic company is incorporated in previous year 23-24 or previous year 24-25. Then is that company will be eligible to get the benefit of tax rate of 25% or not? Answer is yes. Because in the one question last year, ICI mentioned in the mock test paper, I think there was a question in the mock test paper, and ICI mentioned that suppose if any company is newly incorporated, then we assume that turnover for previous year 20 to 23 is less than 400 crores, so that company can get the benefit of the 25%. Now guys, there is a one more change in case of the tax rate of foreign company. So guys, earlier that foreign company tax rate was 40%, but now it has been changed. Now foreign company tax rate is 35%. So remember, now foreign company, your tax rate is 35%. So in case of foreign company, for your examination, your tax rate is 35%. Done. After that, in the like a tax rate topic, there is one more change, that is under section 115 BAC. So 115 BAC is, guys, this 115 BAC is a new taxation regime in case of individual, HUF, AOP, BOI, artificial juridical person. So guys, you know that in the case of the new taxation regime under section 115 BAC, or we can call it the default taxation regime also. So under default taxation regime, till last year, that slab rate was 3 lakh up to 3 lakh, there was no tax. After that, 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh was the slab rate. But guys, now this tax rate is changed from current year. And for current year, for your examination, here basic exemption is a 3 lakh up to 3 lakh, there is no tax. After that, 3 lakh to 7 lakh, 3 lakh to 7 lakh, the tax rate is a 5%. After that, 7 lakh to 10 lakh, your tax rate is a 10%. 10 lakh to 12 lakh, your tax rate is 15%. 12 lakh to 15 lakh, your tax rate is 20%. And above 15 lakh, tax rate is a 30%. So up to 3 lakh, there is no tax. 3 lakh to 7 lakh, here guys, there is a gap of the 4 lakh rupees. So 3 lakh to 7 lakh, 5%, 7 lakh to 10 lakh, 10%, 10 lakh to 12 lakh, there is a 15%, 12 lakh to 15 lakh, there is a 20%, and more than 15 lakh, there is a 30% tax rate. So this all are the tax rates. So guys, there is a change in this slab rate. Like now up to 3 lakh, there is no tax. 3 lakh to 7 lakh is 5%, 7 lakh to 10 lakh, 10%, 10 lakh to 12 lakh, 15%, and 12 lakh to 15 lakh, 20%, and more than 15 lakh, 30%. Now guys, Under section 115 BAC, you can claim the 87A ka rebate also. But 87A ka rebate is available if your income is up to 7 lakh. There is no change in this. So if your income is up to 7 lakh rupees, now you can claim the rebate under section 87A of the 100% of tax or 25,000, whichever is lower. Now guys, in this particular section, there is no change. But if your income is up to 7 lakh now, then your tax will be 20,000 now. So tax 100% tax will be 20,000 or 25,000, whichever is lower is a 20,000 now. So mostly you will get the rebate of the 20,000 here. So now this 25,000 is not more relevant here in this particular section. But guys, here, like in case of the 115 BAC 87A rebate, there is a marginal relief is available. If your income is little bit more than 7 lakh, but it is not more than 7 lakh 22,220, then you will get the marginal relief. How you will get the marginal relief? So guys, here certain examples is given. If you check the example, you will able to understand. Like here, your income is a 7 lakh 20,000. So on 7 lakh 20,000, your tax is a 22,000. Your tax is at 22,000. Now guys, rebate under section 87A is not available because your income is more than 7 lakh. But here marginal relief is available. How you will calculate the marginal relief? So whatever the tax on 7 lakh, if your income is only up to 7 lakh, then tax is a nil na. Plus NTI minus 7 lakh is at 20,000. So whichever is lower, you have to continue. So guys, automatically you will get the rebate under section, here marginal relief of rupees 2,000. So if you check all this 5 example na, then you will able to understand. Okay. Now guys, one more point, one more change is, okay, you know that in the salary head, there is a standard deduction of 50,000. Under section 16, there is a standard deduction of 50,000. Even you follow the new taxation regime or old taxation regime, that standard deduction is 50,000. But guys, remember, this time there is a change. Okay, if you follow the new taxation regime, default taxation regime now, then that standard deduction instead of 50,000, you will get the 75,000. Means instead of 50,000, you will get the standard deduction of 75,000. This is one change. So there is a one change. There is a one change of the standard deduction under salary head. So normally standard deduction under section 16 is a 50,000. But guys, if you follow the 115 BAC, then this standard deduction raised to the 75,000. So now it is available if you of rupees 75,000 if you follow 115 BAC. So here from deduction under this section 16 perspective, 115 BAC is more beneficial because like if you opt out from default taxation regime and follow the normal provision, then this standard deduction is 50,000. If you follow the 115 BAC default taxation regime, then it is a 75,000. You got my point or not? Yes. So this all are amendment in the topic number 1. But guys, topic number 2 is related to capital gain, and there are lots of amendment in the capital gain. So let's start with the capital gain. And guys, in the capital gain, you know that there are lots of amendment. And first amendment is that period of holding is changed from 23rd of July 2024. As well as the indexation is removed. So how indexation is removed or how this period of holding and all is changed. So guys, I am uploading my regular batch lecture only or that exam oriented batch lecture only in this particular video, so you can get the better understanding. Because I don't want to teach you directly, okay, this is the 2 year and 3 year. No, I want to give you the better understanding, deep understanding the provision, because this time examiner is going to test everything from capital gain. And in capital gain, there are lots of amendments. So for the amendment parts, I am uploading my exam oriented batch lecture only here for you, so you can get the better understanding. Okay, completed. Now guys, next part is we are going to start with the types of capital asset. So you know that there are 2 types of capital asset. One is the long-term capital asset and one is the short-term capital asset. Now, when asset is long-term, when asset is short-term. So normally, if any asset is held for the longer period, then it is a long-term capital asset. If any asset is held for the shorter period, then short-term capital asset. But guys, how we will determine that this asset is a long-term or short-term? So focus here, or all people pay attention. Types of capital asset. Types of capital asset. All people just focus here on the board, because there is change in this definition from this year. So types of capital asset, guys, the definition earlier was like in case of the part A they covered the 3-4 asset. One is the In case of any security, in case of any security other than units. So in case of the any security other than units, if that security is listed in recognized stock exchange of India. So in case of any security, that security other than units, if it is listed in recognized stock exchange of India, then guys, the period of holding of that asset you have to check is 1 year. Means if it is transfer within 1 year, then capital gain is short term. And if you transfer after 1 year, then capital gain is long term. So any security other than units, if that security is listed in recognized stock exchange in India, so recognized stock exchange in India means in India there are two recognized stock exchanges. One is the BSC, Bombay Stock Exchange, and one is the NSE, that is National Stock Exchange. So Bombay Stock Exchange and National Stock Exchange, two stock exchanges are registered recognized stock exchange. So if any security other than unit, they have excluded the unit here. And if any security is listed in recognized stock exchange in India, you have to check the period of holding is a 1 year. Now guys, in case of the second point, in case of the UTI units, in case of the UTI units, UTI is a government company, Unit Trust of India. So UTI means Unit Trust of India, that is the government undertaking. So in case of the UTI unit also, you have to check the 1 year. Now in case of the mutual fund unit, in case of mutual fund units, now in case of mutual fund is only equity oriented mutual fund. So if there is any equity oriented mutual fund unit and guys zero coupon bonds, you have to check the 1 year is a period of holding. So guys, we are discussing about the types of capital asset. Two type of the capital asset, one is the long term, one is the short term. So hold for the shorter period, short term, longer period, long term. But what is the period? So here guys, in case of any security listed in recognized stock exchange of India, then your period of holding is 1 year, like shares, listed company share. Suppose I transfer the share of the Reliance or Adani or any other share, then guys, here period of holding is 1 year. Now in case of the UTI units and mutual fund equity oriented unit and zero coupon bonds, your period of holding is 1 year. Now second is part B. Now part B says that any immovable property, immovable property means land, building or land and building, that is called immovable property, or guys any shares of company means shares which is not covered in part A, means other than part A. So other than part A means if any listed company share in the recognized stock exchange in India, then 1 year. But guys, if that unlisted share and all, then here period of holding you have to be check for the as a 2 years. So 2 years is period of holding. So second is part B, in case of immovable property and shares of company, but shares of company other than shares covered in the part A, because here listed shares is already covered here. So unlisted share you have to check the 2 years period, but here share of the company means other than covered in part A. So in part A they covered the listed security, shares and security. If there is a unlisted share, then period of holding you have to check is 2 years. And guys, part C is any other asset. Part C is any other asset. And in case of any other asset, you have to check the period of holding is 3 years. In part C, any other asset means like gold or any other asset, then you have to check the period of holding is 3 years. 3 years is period of holding. So try to understand. There are three parts here. Pay attention. Types of capital asset. Now, first is any security other than unit, they are excluding unit from this first point. So any security listed in recognized stock exchange of India, BSE, NSE listed security, you have to check the period of holding is 1 year. In case of UTI unit, period of holding is 1 year. In case of mutual fund, only equity oriented unit, whether it is a listed or unlisted, irrelevant. Because listed here, first point is talking about the listed. Now second point, UTI units or mutual fund units or zero coupon bonds and mutual fund equity oriented unit only, then period of holding is 1 year. Now immovable property like building or land and building and shares of company that is unlisted, means not listed in Indian stock exchange, then guys period of holding is a 2 years. And any other asset like gold, silver and all, that your period of holding is 3 years. Now remember here mutual fund equity oriented unit, then 1 year. Suppose if there is a debt oriented unit, then suppose if there is a debt oriented unit, mutual fund debt oriented unit, so here it is not covered here, it is not covered here also, so it will be covered in the 3 years. So debt oriented mutual fund unit, you have to check the period of holding is 3 years. But if it is an equity oriented unit, then you have to check the period of holding is 1 year. So again I am repeating, try to understand guys. Types of capital asset. Part A, any security which is listed in recognized stock exchange in India, but they excluded the unit from here, and here they cover only two type of unit. One is the UTI units and one is the mutual fund equity oriented unit. Then guys 1 year period. And guys if there is any other unit then obviously there is a 3 year period. So here any security listed in recognized stock exchange in India, UTI units, mutual fund equity oriented unit and zero coupon bonds, your period of holding is 1 year. In case of the immovable property and share of company which is not covered here, so unlisted share, or I can say that share which is not listed in Indian recognized stock exchange, share which is not listed in Indian recognized stock exchange, then guys shares of company, you have to check the period of holding is 2 years, and any other asset that period of holding is 3 years. Now guys this definition was there till 22nd of July 2024. So this definition is till 22nd of July 2024, but from 23rd of July 2024 our Nirmala Sitharaman ji made some amendment. Now what are the amendment? Try to understand. So here guys amendment is made and this definition is little bit changed, and now this definition is changed, and this definition is changed with effect from 23rd of July 2024. This year capital gain is like, you know that before 23rd July totally different, and after 23rd July onwards that totally different. So with effect from 23rd July 2024, Nirmala Sitharaman ji made like 2-3 amendment. What are the amendments? First amendment is like in the part A, that otherwise then unit word was there, they have removed this line. So otherwise then unit, this line they have removed. So now from 23rd of July 2024, any security listed in recognized stock exchange, means listed unit, then period of holding is 1 year. UTI unit, mutual fund unit, zero coupon bonds, 1 year. Now guys in the part B, that immovable property share of company is 2 year, and guys that part C, that any other asset, that 3 year time limit is removed, and now here also 2 years. So in simple word, now guys in these two cases it is the 2 years period of holding. So with effect from 23rd July 2024, they have changed the definition. Now how you have to remember that new definition? So new definition, types of capital asset. Now remember, any listed security, any type of security, if it is a listed, even it is a unit, any listed security 1 year, UTI units 1 year, mutual fund equity oriented unit 1 year, and zero coupon bonds 1 year. Guys all other assets are 2 years. all other assets are 2 years. Now all other remaining assets are 2 years. So here from 23rd of July 2024, how you will remember, okay, like any security listed in the recognized stock exchange in India, then it is 1 year. UTI units, mutual fund equity oriented unit, and zero coupon bonds with it is 1 year. All other assets are 2 years. So even it is an unlisted share, then 2 years. Immovable property, 2 years. Gold, then 2 years, with effect from 23rd of July 2024. But what was the definition before that? So earlier definition was, like in case of the security, any security listed in recognized stock exchange in India other than unit and UTI units, mutual fund unit, equity oriented, zero coupon bonds, it was 1 year. Immovable property and unlisted share 2 year, and all other assets were 3 year. Now guys, 3-year time limit is removed by the lawmakers, and from 23rd, this is the welcome step. We should be happy from that amendment, because it is our favorable amendment, because period of holding they have reduced to the 2 year. So now from 23rd of July 2024, now in case of any security listed in recognized stock exchange in India, any security, UTI units, mutual fund equity oriented unit, and zero coupon bonds, period of holding is 1 year. All other asset, that period of holding is a 2 year. Now there may be a question, suppose sir, if there is an equity oriented mutual fund unit, then 1 year. But what about the debt oriented mutual fund unit? So debt oriented mutual fund unit, if it is a listed, then it will be covered in point 1 only. If it is a listed, so debt oriented mutual fund unit, if it is a listed, then it will be covered here. So period of holding is 1 year. But suppose if it is unlisted, then period of holding is 2 year. But if there is an equity oriented unit, whether it is a listed or unlisted, it is a 1 year. But debt oriented unit, debt oriented mutual fund unit, if it is a listed, then 1 year. If it is a unlisted, then 2 year. So this is now a definition. Guys, don't worry, we will discuss and we will take certain example also, and with the help of that example, we will understand that what will be the period of holding. Okay. Now guys, first we will check from your compact, okay, what is written here in the compact. So first in the compact, type of capital asset. Now, short-term capital asset and long-term capital asset. So if you transfer the short-term capital asset, there will be a short-term capital gain, long-term capital asset, long-term capital gain. Now capital asset, here security, any security other than unit listed in recognized stock exchange in India, earlier it was 1 year, now also it is 1 year. UTI units, earlier 1 year, now also 1 year. Unit of equity oriented unit and zero coupon bond, earlier also 1 year, now also 1 year. But guys, at the unit, I have written something here. This other than unit word is omitted with effect from 23rd July 2024. So now in case of the listed unit, the period of holding is 1 year applicable from 23rd July 2024. Example is a listed business trust unit. Now guys, earlier what happened, when they use the word unit, and in unit only UTI and mutual fund equity oriented unit covered here. So like business trust unit where it will cover, so earlier it was period of holding was 3 year. Earlier that period of holding was 3 year, but suppose now listed business trust unit, then period of holding is 1 year, because they have omitted other than unit word from the 23rd of July 2024. Now second part. Unlisted share, that is share not covered in part A. Unlisted share means share which is not covered in part A. So if any share is covered in part A, that is listed in Indian recognized stock exchange, then it is 1 year. But other share, there is a 2-year period. Now after amendment also 2 year. Immovable property 2 years. After amendment also 2 year. But any other asset, guys, earlier that period of holding was 3 years, but now it is a 2 years. So now period of holding is a 2 years. Now guys, we will take one example and you will tell me, okay, sir, here period of holding is applicable 1 year, 2 year or 3 years. So we are going to write one example. You can also write a. So guys, this is the definition. Again, I am repeating. If you wish to copy down this example, you can copy down. Please copy down also. Just copy down that example. Okay. So now guys, we will discuss that what was the definition till 22nd July 2024 and what is the definition on or after 23rd July 2024. So again I am repeating, earlier what was the definition? In case of security other than unit listed in recognized stock exchange in India, UTI units, mutual fund equity oriented unit, zero coupon bond, there is period of holding is 1 year. Immovable property, share of the company other than covered in part 1, that is the 2 years, and guys any other asset, that is the 3 years is period of holding. Now after that what is the amendment? Okay, like other than unit they have removed from here. So now definition from 23rd July onward is any security listed in recognized stock exchange, UTI units, mutual fund equity oriented units, zero coupon bonds, period of holding is 1 year. Now all other asset period of holding is 2 years. So all other asset period of holding is 2 years. So let's write one example and you will help me with the answer. You have to answer, okay? So let's start with the example. Here guys, we will discuss here asset. Here, okay, if it is transfer up to 22nd July 2024 and second is on or after 23rd July 2024. So up to 22nd July 2024 and second is on or after 23rd July 2024. Now you tell me, huh? Now you have to answer. Now how you will answer? You always give me two answer, okay? One is the before and one is the after. First asset is in case of the gold. Tell me, gold biscuit, you are having the gold biscuit. What period of holding you will check? Before amendment and after amendment. Means if transferred till 22nd July 2024, then earlier period of holding you have to consider and now new period of holding. So just tell me, gold or silver, So in case of gold or silver, what should be the period of holding? So if you transfer before 23rd July, then period of holding is 3 years. But guys, now every asset period of holding is 2 years. So here now that 3-year time limit is reduced to the 2 years. So if you transfer on or after 23rd July 2024, then period of holding is 2 years. Now second asset. Second is, suppose I am having shares of one company, name is Vari Energy Limited. And this share are suppose listed in Bombay Stock Exchange. Vari Energy Limited, a listed company, shares are listed in Bombay Stock Exchange. Tell me, what is the period of holding? Before and after. Shares of Vari Energy Limited listed in Bombay Stock Exchange. Period of holding. Vari Energy Limited. Listed price. Listed share. Right answer is, so guys, Vari Energy Limited, that earlier that time limit was 1 year. Now also 1 year. If this share are listed. Now Vari IPO is coming in the market, I think. So you should apply for IPO if you like the apply, and if you like this type of company, then Vari Energy is very good company in the solar renewable energy. So Vari Energy Limited, listed share. Then guys, we check 1 year obviously, because in case of any security listed and recognized stock exchange, earlier also 1 year, now also 1 year. Now next point is, guys, suppose third point, if there is a debt oriented debt oriented mutual fund unit of Kotak Mutual Fund listed in National Stock Exchange. Now tell me, debt oriented mutual fund unit of Kotak Mutual Fund listed in National Stock Exchange. So debt oriented mutual fund unit of Kotak Mutual Fund listed in National Stock Exchange. Tell me. Debt oriented mutual fund units of Kotak Mutual Fund listed in National Stock Exchange. So debt oriented mutual fund unit of Kotak Mutual Fund listed in National Stock Exchange. So guys, earlier that definition was like any security, but they not included the unit. So other than unit. So guys, debt oriented mutual fund unit, even it is listed, it is not covered here because they mention other than unit. It is not covered in the equity oriented unit. So period of holding is considered as a 3-year pre-amendment. But after amendment, they have removed the word here other than unit. So if it is any security including unit, if it is listed in the National Stock Exchange, then period of holding is 1 year. So earlier that period of holding was a 3 years and now it is a 1 year. Earlier that period of holding was 3 year, now it is a 1 year. Next is a point number 4. Just tell me unlisted zero coupon bonds. Unlisted zero coupon bonds. Unlisted zero coupon bonds. Tell me, unlisted zero coupon bonds. Unlisted zero coupon bonds. Unlisted zero coupon bonds. Unlisted zero coupon bonds. 1 year, 2 year, or so guys, unlisted zero coupon bonds. Guys, unlisted zero coupon bonds. Whether it is a listed or unlisted, it is a 1 year. Because earlier also it was written zero coupon bonds. Now also it is a zero coupon bonds. Whether it is a listed or unlisted, it is a 1 year period of holding. So here guys, that period of holding is a 1 year. So in case of zero coupon bonds, whether it is a listed or unlisted, it is a 1 year period of holding. So 1 year period of holding. Now point number 5 is a house property. Suppose guys, you are having any house property. Then what is the period of holding for house property? House property. House property. Immovable property. Tell me. So can I say that? So in case of house property guys, earlier also that immovable property period of holding was 2 year. And now also it is 2 year. Earlier also 2 years, now also 2 years. So period of holding is 2 years. Okay. Now after house property, next is, suppose, tell me, very interesting. Shares of Apple Inc., Apple Incorporation, listed in USA exchange. Listed in, it is not listed in India. It is listed in USA stock exchange. Tell me. Shares of Apple Inc., that is Apple Incorporation, Apple company, foreign company share, that is listed in USA stock exchange. Period of holding. How you will check? Guys, shares of Apple Inc. listed in USA stock exchange. So earlier also that period of holding is a earlier also USA stock exchange, means not listed in India stock exchange. So can I say that period of holding was 2 year? Because what they have mentioned here, guys, I have mentioned here, that is the any security listed in a recognized stock exchange in India, then 1 year. Otherwise, any share of the company other than covered in part A, I'm not saying unlisted here, means not listed in Indian stock exchange. So any shares of the company, either it is a unlisted company share or it is a any listed company share which is outside India. So that is not covered in the part A na. So here in case of the shares of the company, like other than covered in part A, so Apple Inc share will be covered here. So guys, earlier also that period of holding is 2 year, and now also that period of holding is a 2 years. So earlier also that period of holding is 2 years. Now also that period of holding is 2 years. Now next is a point number 7. Suppose shares of BB Publication Private Limited. I am having one company in the name of BB Publication Private Limited. So guys, BB Publication Private Limited, this private limited shares, what is the period of holding for the long term and short term? So guys, can I say that here for the BB Private Publication Private Limited, 2 years is period of holding. To 2 years period of holding. Now next is unit of business trust listed in Bombay Stock Exchange. Now unit of business trust listed in Bombay Stock Exchange. So guys, business trust means like you know that like embassy office park, that is a business trust. So business trust unit listed in Bombay Stock Exchange. So can I say that earlier that is not covered here in the point number 1, it is not covered because they mention any security other than unit. So unit is not covered here, and here only they covered the UTI units and mutual fund equity oriented unit. So all other unit were covered in the part C. All other unit were covered in the part C for the 3 years. But guys, now they have removed the that word that is other than unit. So can I say that now unit is covered here? So business trust listed unit, there is a period of holding is 1 year. So here unit of business trust listed in the Bombay Stock Exchange, earlier we used to check the period of holding is 3 years, but now it is a 1 year. Earlier it was a 3 year, but now it is a 1 year. Now next point number 9, that is unlisted mutual fund unit, unlisted mutual fund unit of SBI equity oriented mutual fund. So here unlisted mutual fund unit of SBI equity oriented mutual fund, tell me. Here unlisted mutual fund unit of SBI equity oriented mutual fund. Unlisted mutual fund unit of SBI equity oriented mutual fund. So SBI equity oriented, guys, equity oriented mutual fund unit, earlier also it was 1 year, now also 1 year. So unlisted or listed, whatever equity oriented mutual fund unit, that period of holding is 1 year. And last point number 10, suppose unlisted debt oriented mutual fund unit of Kotak mutual fund. So unlisted debt oriented mutual fund unit of Kotak mutual fund, tell me. Last point. Unlisted debt oriented mutual fund unit of Kotak mutual fund. unlisted debt oriented unit of Kotak Mutual Fund. Right answer is, can I say that earlier it was 3 years and now it is 2 years. Like this year, you know, the capital gain topic will take more time because I used to teach this period of holding within 10 to 15 minutes maximum. But now I have to teach you that what is up to 23rd July and what is after 23rd July. Okay, now next part is related to the guys second proviso, that is the indexation. So here indexation is available, but guys here what I have mentioned, okay, indexation is not applicable with effect from 23rd of July 2024. So with effect from 23rd of July 2024, guys, this indexation is not applicable at all. This indexation is not applicable at all. This section is not applicable at all. This section is not applicable at all from 23rd of July 2024. Means this indexation, this proviso is not applicable. So here I have written here, okay, guys, from July 23rd, 2024, if asset transfer after this date, the indexation benefit are not available on the transfer of long-term capital asset regardless of the holding period. So whatever your holding period, even that asset were acquired 10 year, 5 year, 6 year ago, then also indexation is not available. So guys, now indexation is already go away. Now indexation left us and indexation is not applicable from 23rd of July 2024. Now sir, how we have to remember is for our examination, yes sir, is indexation is there or not? So guys, for your examination, always remember, if asset were transferred, if asset got transferred before 23rd of July 2024, then indexation is there. Means indexation is there, you have to calculate indexation, there will be an index cost of acquisition. But suppose if asset is transferred on or after 23rd of July 2024, then guys, there is no indexation. This index benefit is not available while computing capital gain. So while computing capital gain, this indexation is not applicable if your asset got transferred on or after 23rd of July 2024. So in examination, if any question comes, you have to double check the transfer date. If transfer date is on or after 23rd July 2024, then indexation is not applicable. But if transfer date is before, then indexation is applicable. Now sir, we have heard that Nirmala Sitharaman ji has restored the indexation. So is Nirmala Sitharaman ji has restored the indexation in true sense? That we will discuss after break. After break, we will discuss that really Nirmala Sitharaman ji has restored indexation in case of immovable property or not. That we will discuss after break, and we will see that is Nirmala Sitharaman ji has restored the indexation or not. But guys, as of now, indexation is not available. What you feel, what you heard, that is Nirmala Sitharaman ji really restored the indexation or not? Guys, do one thing. I can give you one question. I will solve that question after break. You should try in the break and just tell me is there is an indexation or not, and what will be the tax liability. So just write one small question. So guys, just write one question. Mr. BB purchase immovable property on Mr. BB purchase immovable property on 16 July 1988. Mr. BB purchase immovable property on 16 July 1988 for rupees 7 lakh. Now guys, just write FMV as on 1st April 2001 is FMV as on 1st April 2001 is FMV as on 1st April 2001 is 10 lakh rupees. 10 lakh rupees. 10 lakh rupees is FMV as on 1/4/2001. Now, heat transfer such asset on 10 December 2024 means after amendment for rupees 50 lakh. For rupees 50 lakh. Mr. BB purchased a property, immovable property in 1988 for 7 lakh. FMV as on 1/4/2001 is 10 lakh. He transfers such asset on 10 December 2024 for 50 lakh rupees. His PGBP income is rupees 25 lakh. Means my PGBP income is 25 lakh rupees. Calculate tax liability for previous year 24-25, 24-25, assessment year 25-26. Calculate tax liability for previous year 24-25, assessment year 25-26. Just guys, Mr. BB, his age is 35 years and he is a resident individual. He is a resident individual. Mr. BB, age 35 years, resident individual. Done. Now I am going to give you break for the next 15 minutes. 10 minutes your legitimate break. 5 minutes just guys do the brainstorming and just try to calculate the tax liability, because you have mentioned that indexation is restored on immovable property. You know that indexation, I can like show you some article on the website. Okay, indexation restored, index benefit restored. So here there are various websites are given, and index benefit restored. Here one financial like index benefit is restored. So is really that index benefit is restored or not? That you have to check it and just try to calculate the okay, what amendment they made in the law. Just I am showing you the amendment part. Okay, so directly just I am showing you the section 112. 112 is basically for long term capital gain. So 112 is Nirmala Sitharaman ji really restored the indexation or not in case of immovable property? So this is the section 112, and this 112 they have like amended, and 112 they have amended, and guys in section 112 they have introduced one proviso. Like 112 first point says that 112 tax rate is, if it is before like 23rd July, tax rate is 20%. On or after 23rd July, tax rate is 12.5%. Now guys, this one proviso they have added, and is due to that proviso your index is restored or not, I don't know, you have to tell me. Here this is one proviso, this proviso they have added, this proviso, just focus here, this proviso they have added. And what this proviso says, provided further that in case of transfer of long-term capital asset, being the land, building or both, if there is a immovable property which is acquired before 23rd of July 2024, and where the income tax computed under the item number B is a without indexation, because 12.5% income tax, that is without indexation. exceed the income tax computed in accordance with the provision of this act as they stood immediately before the amendment by Finance Act 2024, such excess shall be ignored. So that Nirmala Sitharaman ji made one amendment, and Nirmala Sitharaman ji says that I will explain you after break. So guys, there is a 15 minutes break. Just have your break. Just try to calculate the tax liability. Now here indexation is applicable or not, just do some R&D. How you will do the some R&D? Just read the section 112, and from this section 112 what you get it means section 112 amended section 112 directly from income tax website. If you open the income tax website, Income Tax Act amended by the 2024 Finance number 2 Act. And after that, what is the 112? Just read this subsection 1. Just read this subsection 1. And from that subsection 1, what you are getting. And on the basis of that, just calculate the tax liability. Okay. Yes, people, done with your break? Yes, sir. Sir. Our answer is, so guys, here I got various answer. Midun says that 12,15,500 is tax liability. Silva says that as per the old 2.75 lakh, new 5 lakh and excess is ignored. Hemanta says that capital gain is 13,70,000, capital gain tax is 2,74,000, tax liabilities 8,69,960. Abirmani says that LTCG is 24,59,000 after indexation, since 12.5% tax is so and so, exceed of 20%. Okay. Okay, guys, you did it. Done. Now just focus here. Now just focus here. Guys, is indexation benefit is available from 23rd of July 2024 or not? Right answer is no. Index benefit is not available. Index benefit is not available for computing of capital gain, any type of the capital gain, even on the immovable property. That index benefit is not available. Why it is? Because guys, if we see the law okay, this is the law. I'm just showing you the section number 48 here. And what section number 48? That is computation of capital gain. And computation of capital gain, there is a second proviso, and what this second proviso says, try to understand. What this second proviso says, that try to understand. Here guys, this is the second proviso. Just focus here. What second proviso says that of section 48, computation of capital gain. So second proviso says that provided further that where the long-term capital gain arising from the transfer and which take place before 23rd of July 2024. Means if before 23rd of July 2024, if transfer took place of a long-term capital asset other than capital gain arising to the non-resident from the transfer of share debenture that is mentioned in the first proviso, directly check here. Then shall have the effect the word cost of acquisition and cost of improvement. The word index cost of acquisition and index cost of improvement has been substituted. So guys, indexation benefit is not available for computation of capital gain. Even you have transferred the asset, like you have transferred the immovable property, even immovable property on or after 23rd of July 2024. So guys, for the computation of capital gain, indexation is not available from 23rd of July 2024, because guys, while computing the capital gain, they clearly mention that this index benefit is available only if the asset transfer before 23rd day of July 2024. Then guys, what is that law? We have heard that there is a index benefit is restored in case of immovable property. Is in the true sense they have restored? Answer is no, they have not restored in true sense. They have restored only for the purpose of tax liability. They have restored only for the purpose of tax liability. It means guys, your computation will always be without indexation only. Your computation of capital gain will be always without indexation. Only they have restored for the purpose of computation of capital gain. Means for the tax calculation they made the amendment. So if they restore the indexation for computation, then they should change here only. Like here in the section 48 only, mode of computation, they can write if immovable property, then indexation benefit is available, or without indexation you can calculate it in both way. Answer is they have not made any amendment here. Here they clearly mention that in the second proviso this indexation is not available from 23rd of July 2024. So for the computation of capital gain and for the computation of tax liability, for the computation of capital gain and for the computation of total income, guys, there is no index benefit. Only for the tax computation they have given one benefit. Now how it will be, like how it will impact on you, don't worry, I will explain you. Pay attention, guys. This is the question. Now this question, here there is a immovable property. That immovable property, there is a long-term capital gain, but immovable property transfer on or after 23rd of July 2024. Then guys, for computation of capital gain and for computation of total income, indexation is not there. For computation of total income and for computation of capital gain, indexation is not there. Only at the time of computation of capital gain tax liability, there will be an indexation. And then that also available when you satisfied the four condition. And what are the four condition? I will explain you that four condition is satisfied then at the time of computation of capital gain only you will get the benefit of indexation. So here guys, first we calculate the total income. Okay, so let's calculate the total income, and guys assume that assessee not following 115 BAC. So assessee, here in the question you can write assessee opted out from 115 BAC. So now try to understand. We are calculating first total income. So computation of total income. So computation of total income. Now guys, when you will calculate the total income, that time when you will calculate the total income, how you will calculate the total income? So for the computation of total income, first is your PGBP income given in this question. That PGBP income is 25 lakh. Now your capital gain you will calculate. Now remember guys, for capital gain calculation, indexation is not there. Even it is a immovable property. Even that immovable property transfer on or after 23rd of July, then indexation is not available. Obviously it was transferred before, then indexation was there. Now guys, how you will calculate capital gain? Your full value of consideration is 50 lakh rupees. And here your cost of acquisition is your original cost or FMV 1 for 2001. That benefit is still there. That cost was 7 lakh rupees. That FMV is a 10 lakh rupees. So whichever is higher. So 10 lakh rupees benefit is still there. So here your cost was 7 lakh. Your FMV as on 1 for 2001, whichever is higher. So here guys, that is the 10 lakh. So guys, here your cost of acquisition you have to reduce is 10 lakh. And guys, here your long-term capital gain is a 40 lakh. Here your long-term capital gain is a 40 lakh. Now here your long-term capital, after long-term capital gain, gross total income or net taxable income is your 65 lakh. So here your total income is 65 lakh. Now how you will calculate the tax? Here they change. Means for the computation of capital gain amount, for the computation of total income, indexation is not available. Because if you transfer on or after 23rd of July 2024, then guys, indexation is not available. But for tax calculation, there is an option is given. Now we will calculate the tax. So here, if I calculate the tax liability, then guys, how to calculate the tax? So for the calculation of tax, first we are calculating tax on long-term capital gain. Tax on long-term capital gain, because your total income is 65 lakh, BGBP income 25 lakh, capital gain, long-term capital gain is 40 lakh. So how to calculate the tax here? Here I am writing note number 1. Now just stop for some time. Don't write. Please focus here. Now note number 1. Now at the time of calculating the tax liability, what they are saying, you know that if 4 conditions are satisfied. First condition is if 4 conditions should be satisfied. First condition is if assessee is an individual and HUF. That is the first condition. Only this benefit is given to individual and HUF. Second is that assessee transfer that asset is a immovable property. So immovable property got transfer. Third condition, that immovable property was acquired before 23rd of July 2024. Means this immovable property he has acquired before 23rd of July 2024. And guys, he is transferring this asset on or after 23rd of July 2024. If all the 4 conditions are satisfied, first condition, assessee is an individual and HUF. Asset is an immovable property. That immovable property acquired before 23rd of July 2024. And guys, he is transferring this on or after 23rd of July 2024. If all the 4 conditions are satisfied, then guys, how to calculate the tax? You know that. For the calculation of the tax, you have an option. Either pay 12.5% tax without indexation. Means you have an option that either pay the tax 12.5% without indexation or pay the 20% tax with indexation. So 12.5% tax without indexation or 20% tax with indexation, whichever is lower, means whichever is more beneficial. 12.5% tax without indexation or 20% with indexation. But guys, this benefit is available only in case of individual and HUF. If asset is an immovable property, that asset were acquired before 23rd of July 2024 and asset is transferred on or after 23rd of July 2024, then you have an option that you can pay the tax either 12.5% tax without indexation or 20% with indexation on the long-term capital gain. Now here, if I calculate the 12.5% without indexation, so guys, your capital gain amount without indexation was 40 lakh rupees. So without indexation was 40 lakh rupees. So here I will calculate 40 lakh rupees multiply by 12.5%. So 40 lakh rupees multiply by 12.5%, it comes to the 5 lakh rupees. Or guys, I will calculate 20% with indexation. Now we will calculate the capital gain with indexation, but only for the purpose of calculating this tax, not for the purpose of calculating the capital gain or not for the purpose of calculating your total income. So guys, here we are going to calculate the tax with 20% tax with indexation. So here guys, what I will do, here I will calculate the capital gain with index. So capital gain with index, so your full value of consideration is basically 50 lakh rupees. Your full value of consideration is 50 lakh rupees. Index cost of acquisition, so 10 lakh rupees was your cost, multiply by 363 current year indexation and 100 that is previous year, your 1-2. So here guys, your index cost of acquisition is 36 lakh 30,000. So 36 lakh 30,000 is your indexation. Now 50 lakh minus 36 lakh 30,000. So remaining comes to the 13 lakh 70,000. This is your long-term capital gain with indexation. So here what I will do, here that 13,70,000 multiply by 20%. So 13,70,000 multiply by 20%, 13,70,000 multiply by 20%, it comes to the your 2,74,000. So now you will consider the tax is only 2,74,000. So here tax will be 2,74,000. So guys, here tax is 2,74,000. So tax on long-term capital gain is 2,74,000. 2,74,000. Now I have to calculate tax on balance income. So now tax on balance income is tax on balance income. Tax on balance income. My tax on balance income. So guys, tax on balance income is on 25 lakh rupees. So up to 2,50,000 there is no tax. I will calculate by slab rate. Now 2.5 lakh up to 5 lakh, it is a 5%. It comes to 12,500. Now more than 5 lakh up to 10 lakh rupees, it's a 20%. So it comes to the 1 lakh rupees. Now more than 10 lakh up to here 25 lakh. So it is a 30%. So here 15 lakh multiply by 30% comes to the 4,50,000. So guys, here my tax will be, now here there is a very interesting case. Here my tax is 450 plus 1 lakh plus 12,500 plus 2,74,000. So it comes to the 8,36,500. Now question is that sir, is surcharge is applicable or not? Answer is yes, surcharge is applicable. Guys, here surcharge is applicable because your total income is more than 50 lakh rupees. And for the computation of total income, you have to consider the capital gain without indexation. Because now indexation is not available on or after 23rd of July 2024. That indexation is not available. So here guys, what will happen? Here is surcharge is applicable. Answer is yes. You will say, sir, surcharge should not be there na, because your capital gain is, your total income is not more than 50 lakh. Because if you calculate only this 25 lakh and if you take the capital gain without indexation, with indexation, then it is a 13,70,000. So 13,70,000 plus 2,500. So it comes to 38,70,000. But sir, then also you are saying surcharge is applicable. Answer is yes, surcharge is applicable. Why surcharge is applicable? Because your income is more than 50 lakh. And your income is more than 50 lakh. So here guys, we will add the surcharge at the rate 10%. So here surcharge is applicable 836,500 multiply by 10%. It comes to the 83,650 and total comes to the 9,20,150. And here add health and education cess at the rate 4%. So here 4% comes to the 36,806. So your total comes to the 9,56,956. That is your net tax liability. So see, our Nirmala Sitharaman ji has not restored your indexation on immovable property. Nirmala Sitharaman ji just played one game. Nirmala Sitharaman ji says that for the tax calculation, I am giving you the option. For the tax calculation, I am giving you the option. Means for tax calculation, for the tax calculation only, you can pay either 12.5% without indexation or 20% with indexation. But that is only applicable when guys, 4 conditions are satisfied. Individual and HUF. And one more point, that individual and HUF should be the resident individual and HUF. If that individual HUF is a non-resident, then this benefit is not available. If resident individual HUF immovable property acquired before 23rd of July 2024, transfer on or after 23rd of July 2024, then guys, while calculating the tax liability, you have an option. Either pay the tax at the rate 12.5% tax without indexation or 20% with indexation. So they did the cheating. Like, because they have not changed the second proviso to section 48. If they change, they could change the second proviso na. Then what will happen? Okay, here also we will consider the capital gain only that 13,70,000, only 13,70,000. So our net taxable income can be lower. So surcharge is not applicable. But guys, here remember, Nirmala Sitharaman ji says that whoever made this particular provision na, he's a very intelligent officer. Whoever made this amendment na, whoever made this provision na, that person is very intelligent officer. Because guys, one more point I will explain you after this question. Just copy down this answer first. First copy down this answer. First copy down this answer. First copy down this answer. You have copied this part, solution, and also copy down this part. Done, people? Done? Done, people? Shashank, the proviso of section 112 say that exceed income tax computed in accordance with provision of this act. Okay. So before that, how you compute the income tax? So before this amendment, like earlier, that tax rate was the 20%, na? So 20%, but with indexation. But only for capital gain purpose, na? If asset acquired on 23rd July 2024, okay, if asset is acquired on or after 23rd of July 2024, then anyway indexation is not there. So obviously indexation not applicable. Indexation not applicable means if you transfer after 2, 3, 4 years, then also guys, that your tax rate will be 12.5% without indexation. Okay, done. Now guys, just don't worry, we will write it. Guys, you received book or not? You received book? If you have the book, then just say yes, we have book. You have book? Okay, so everyone received the book except two student. No problem. Except 1 or 2 student, everyone received the book. Okay. Okay. Guys, okay, this was the tax computation. Done. Okay. One more question you will do, or one more question like you have not received the book. It's okay, no problem. Guys, why we are doing this? Because let's see once Bear Act, what Bear Act says. Again, I am checking the Bear Act, or directly I can check from book only. Okay, let's see. what is written in our book. So here guys, here I have mentioned that second proviso, that exception to section 48, that indexation is basically not available. From 23rd of July 2024, indexation is not available. Now directly check one page number for the computation of capital gain. If you have the book, then just check the page number where I have given the computation of tax liability. That is, I think, on the page number. That is, I think, on the page number here. On the page number I think 58. Okay, just tell me one thing. In your book, one note is given after this page, after this here, one note is given or not? In your book, here after this point, one note is given in the bracket or not? Naveen, in your book, like if any people not received, don't worry, but I'm asking to the person who received. So in your book, here in the bracket, one note is given or not? Yes, one note is given. Okay, so your book is a correct, that is very much amended, means after that budget is passed. Because what happened, this amendment is made by Nirmala Sitharaman when this amendment is made by Nirmala Sitharaman in the Finance Act, not in the Finance Bill. In Finance Bill, indexation was totally removed, but in the Finance Act, they have included the indexation. So I will show you the page, okay, which page you are having. So give me a minute, give me a minute. Okay, so guys, yeah, there is a one note, na? Okay, so in your book, you have the note, means your book is very much amended. Give me 2 minutes so I can show you that pages. Yes, people. So here in your book, what is written? Try to understand. So for the computation of capital gain, other than referred under section 112A and 111A, if there is a capital gain, and capital gain is basically other than 112A and 111A, then how you will calculate the capital gain? So guys, transfer took place before 23rd of July 2024. And if there is a long-term capital gain, that is taxable at the rate 20%, short-term capital gain taxable as per the slab rate. But if transfer took place on or after 23rd of July 2024, then on the long-term capital gain, your tax rate is 12.5%. That we have already discussed in the first topic also. Normally, long-term capital gain, earlier it was 20%. Now tax rate is at 12.5%. But here one note is given. What this note says? This note says that if resident individual or HUF transfer any immovable property acquired before 23rd of July 2024. So you have acquired the immovable property before 23rd of July 2024, and the tax calculated on LTCG at the new rate, that is 12.5% without indexation, is higher than the tax calculated as per the old rate, that is 20% with indexation, then the excess tax is ignored. In simple word, I can say that assessee is required to pay tax at the rate 12.5% without indexation or 20% with indexation, whichever is lower. But guys, this amendment, this proviso, this note is added in section 112, means only at the time of calculating tax you have to check that 12.5% with 12.5% without indexation or 20% with indexation. It means for computation of tax liability, It means for computation of tax liability, you have to always ignore the indexation. Indexation is not applicable while computing the while computing the capital gain. Okay, so what I'm saying that okay, while computing the capital gain or total income, means while calculating capital gain, while computing total income, there is no indexation. But guys, while calculating the tax liability, only at the time of tax liability under section 112, this option is given to the resident individual or HUF transfer any immovable property acquired before 23rd of July 2024. Then tax is either 12.5% without indexation or 20% with indexation. They did the cheating. Why they did the cheating? You know that. Guys, one very interesting case, I can tell you how they did the cheating. I can tell you. Pay attention. Suppose for an example, one more example, you can write this example. Example number 2. Example number 2. Now guys, example number 2, what happened here? Okay, suppose for an example, I have acquired Mr. BB, resident and ordinarily resident, okay? Now I acquired, suppose, one house property on 16th of July 2001 and my cost was suppose 10 lakh. My cost was 10 lakh rupees. Now guys, suppose I transfer house property on 15th of December 2024, means after this amendment, and my selling price is suppose 25 lakh. Now there is a one very interesting case. Selling price is 25 lakh. Now my PGBP income is suppose 10 lakh. Calculate tax liability. Assume assessee not opted 115 BAC. So just ignore the 115 BAC. 115 BAC is not applicable. Now guys, how you will calculate the total income? So here I am calculating total income. So computation of total income, and you know that for computation of total income, here for computation of total income, I will take the PGBP income is 10 lakh as it is. Now capital gain. So in capital gain, your full value of consideration is 25 lakh. Now guys, minus cost of acquisition, index is not applicable, index is not available. So cost of acquisition is 10 lakh. So here can I say that your long-term capital gain is 15 lakh. Long-term capital gain is 15 lakh. So here your gross total income or net taxable income is 25 lakh. While calculating capital gain, guys, while calculating capital gain and total income, indexation is not there. Now how you will calculate the tax? So guys, here while calculating tax, so calculation of tax liability, calculation of tax liability. So while calculating the tax liability, calculation of tax liability, how you will calculate the tax liability? So first is tax on LTCG. So guys, in LTCG, you have to consider two, that is 12.5% without index. So you calculated tax as calculated capital gain without index only, na? So here 12.5% without index, it means guys here your 15 lakh multiply by 12.5%. So here guys 15 lakh multiply by 12.5%, it comes to 1,87,500. and second is 20% with indexation. But guys, when you calculate capital gain with indexation, so here I am calculating capital gain with indexation. So here capital gain, if I calculate with index, then can I say that full value of consideration is 25 lakh? Now just do the indexation. So here you will calculate the index cost of acquisition. So index cost of acquisition is basically 10 lakh. Multiply by 363, divide by 100, that is 1 to index. So here your index cost of acquisition is a 36 lakh. So practically here should be the loss. It is a loss, long-term capital loss. So on this long-term capital loss, 36 lakh minus 25 lakh, it's a 11 lakh rupees loss. So 11 lakh rupees is a loss. Now with 20% indexation, obviously this tax is a nil. You have to consider whichever is lower. So guys, here you will consider the nil. But you know that this losses you cannot carry forward and set off. This losses you cannot carry forward and set off, because guys, while calculating capital gain, you have to consider without indexation only. While calculating capital gain for income, for capital gain amount, for long term, short term, for capital gain amount, for long term, here guys index benefit is not there. Only for the limited purpose of the tax calculation, they have given you the option that just pay 12.5% without indexation and 20% with indexation. So here, okay, there is a like a issue 3,63,000. Okay, 36 lakh, 10 lakh rupees multiply by 3.63, it comes to the 36 lakh 30,000. So 36 lakh 30,000. So 11 lakh 30,000 loss. So on loss, obviously there is no capital gain. Here guys, you will calculate the tax on PGBP, or you can say that balance income. And your balance income is 10 lakh rupees. So balance income 10 lakh, slab rate up to 2 lakh 50,000. There is no tax. 250 to 5 lakh 5%, 5 lakh to 10 lakh 20%, more than 10 lakh 30%. So here it comes to 1 lakh 12,500. So on 1,12,500, here your surcharge is not applicable. Just you have to add the health and education cess at the rate 4%. So on the 1,12,500 multiply by 4%, it comes to the 4,500. So it's 1,17,000. So 1,17,000 is your net tax payable. So guys, you know that. This loss, can you set up and carry forward? Answer is no. This loss is now lapse. So Nirmala Sitharaman ji has not restored the indexation. Nirmala Sitharaman ji partially restored the indexation only for the purpose of computation of tax. Like if Nirmala Sitharaman ji has restored the indexation fully in immovable property cases, then guys, this losses I can set up and carry forward. But now I cannot set up and carry forward this losses. This losses you have to ignore, because this losses is not part of your computation. You understood or not? Guys, tell me, you understood or not? This note, okay, in the PDF uploaded, this note is not there. Yes, because that batch was started before that July. That's the reason. But you book you will get you will get that note. Don't worry. Done. Arey guys, tell me you understood everything or not? Understood. So Nirmala Sitharaman ji did the cheating. Nirmala Sitharaman ji has not restored indexation fully. Only for the tax purpose, Nirmala Sitharaman ji has restored. For revision, Sachin, only you have to use the compact. There is no need to read the bare act book. Bare act book is whenever we required, then we will check the bare act language. But for the revision purpose, your base material will be the compact and compiler. Miritu Bhashni, but here they are saying that if this tax is higher than this, so if this tax is higher than this, it is a 1,87,500, so we have to ignore. So 187,500 we have ignored and we have considered the nil. And tax on balance income is 1,12,500. Miritu, sir, whenever the lower must no na loss is how on tax is always on the income na, how on the losses has to be carry forward. First time study also compact is enough. Answer is yes, it is very much enough. Why don't you charge the health and education cess for capital gain? Hey, capital gain there is nil na. Capital gain there is a nil na. Chirag, some question of compiler we will solve in the class, some question will be in the home. Shashank, set top end. Yes, this loss is not allowed to carry forward. Nothing will happen with this losses. This is lapse. Losses, where is loss? Your capital gain is 15 lakh. Where is loss? Loss is not there na. Okay, do one thing. We will make one table and from that table, I will give you everything. You will able to understand, guys. So just write one table with me. You can write anywhere in your book in the compact. If you have any space, any page, you can use that page. Okay. So we will understand everything by help of one table. So you will able to understand. So guys, here focus here. First focus here. After that, right. I will give you time. Pay attention. Suppose guys, if long-term capital gain is there, long-term capital asset. So long-term capital asset. So there will be a long-term capital gain. Now, if long-term capital asset transfer before 23rd of July 2024, then what will happen? And if it is transfer on or after 23rd of July 2024, then what will happen? So if it is transfer before 23rd of July 2024, then what will happen? And if it is transfer on or after 23rd July 2024, then what will happen? So guys, two part. First is while calculating capital gain, what you will do? So while calculation of capital gain, what you will do? And guys, while calculation of tax liability on LTCG under section 112, what you will do? Focus here. Guys, suppose if asset is transfer before 23rd of July 2024, if asset is transfer before 23rd of July 2024, then earlier, obviously, index benefit is available. Index benefit is available. Index benefit is available. And what is the tax rate? Tax rate is very simple. 20% is tax rate. It's very simple. If your any long-term capital asset is transfer on like before 23rd of July 2024, then index benefit is available. Tax rate is 20%. But guys, suppose if the asset is transfer on or after 23rd of July 2024 and long-term capital asset, then guys, first point is index benefit not available. Index benefit not available. In any case, this index benefit is not available. Index benefit not available. Now, what will be the tax rate? So, can I say that here tax rate is at 12.5% that we have discussed in the first topic also? Okay, long-term capital gain is taxable at the rate 12.5%. So, tax rate is 12.5%. But guys, there is a one exception that you have to understand. Here I am writing one exception. Try to understand. Condition, there are four conditions. First is, if assessee is a resident individual or HUF, plus that asset should be immovable property, and guys, asset is acquired before 23rd July 2024, means you have acquired this asset before 23rd July 2024, then what will be the tax liability? Your tax liability will be either 12.5% without index or 20% with index, whichever is lower. Now you understood or not? So here guys, again I am repeating, if there is a long-term capital asset and long-term capital asset is transfer before 23rd of July 2024, then obviously index benefit was there, tax rate is 20%. But suppose long-term capital asset is transfer on or after 23rd July 2024, index benefit is not available while calculating capital gain. But guys, for the calculating the tax liability, normally tax rate is 12.5%. But there is a one exceptional cases, that is resident individual HUF immovable property acquired before 23rd of July 2024, and obviously you are transferring on or after 23rd July 2024, then you have an option to pay the tax either 12.5% without indexation or 20% with indexation. Just copy down this part. Just copy down. Yes, people. Sairaj asking one question. Yes, sir. On or after 23rd July 2024 sale, we cannot carry forward the capital loss. That is not the case. I am saying that if there is a, like, for computation of capital gain, there you will consider without indexation. So computation of capital gain, it is always without indexation. So if there is a loss here, that loss you can set up and carry forward. Na? Suppose instead of here full value of consideration, instead of 25 lakh, there is a 5 lakh. So this 5 lakh will be the loss. Na? This can be set up and carry forward. But suppose without indexation, there is a profit. And if you do with indexation, then there is a loss. Then obviously this loss is not allowed to be set up and carry forward, na? Because this is not for the computation of income. You have to consider without indexation only. Okay, do one thing. Can I give you one question? You will solve. Huh? Just tell me. Can I give you one question? Huh? One question. One question. Tell me. You will solve this question or not? Can I give you one question? Yes, sir. Yes, sir. Yes, sir. Okay. So, I'm going to give you one question. I just want that. Hope so your answer is correct. Let's see. So guys, just start writing one question. Mr. Hari, just start writing one question. Acquired a house property on 16 Feb 1996 for rupees 5 lakh. Mr. Hari acquired a property, house property on 16 Feb 1996 for rupees 5 lakh. He incurred improvement. He incurred on improvement as follows. So he did some improvement, and that improvement is on, first is on 15 December 1998 he spent 2 lakh for the improvement. Now on the 19th of April 2001 he spent 1 lakh rupees. Guys, on the 15th of December 2012 he spent 5 lakh rupees. He spent 5 lakh rupees. Now FMV of house property as on 1/4/2001 is rupees 15 lakh. 15 lakh. And SDV on 1/4/2001 is 12 lakh rupees. So here FMV of house property as on 1/4/2001 is 15 lakh rupees, and SDV as on 1/4/2001 is a 12 lakh rupees. Now just write income from salary, bracket में just write computed. So salary is already computed, means after claiming all the deduction and all. So income from salary computed is rupees 32 lakh. So his income from salary is 32 lakh. You required to, he sold house property for rupees 92 lakh. He sold house property for rupees 92 lakh. Assume he opted out from 115 BAC. So 115 BAC is not applicable. Now you have to calculate. So just write, there are two parts. Part A, calculate total income and tax liability if transfer took place on 22nd July 2024. And part B, just write, calculate total income and tax liability if transfer took place on 23rd July 2024. Now you have to solve this question two times. One is the, if transfer took place on 22nd of July 2024, then what will be your total income and tax liability? And in the second part, if it is transfer on 23rd of July 2024, then what could be the tax liability and total income? Just do it. Reward, yeah, if your all four answers are right, you will be rewarded with 51 rupees. Okay, if your all four answers are right, because I will ask you four answers. First is the calculation of total income in this part and tax liability, and second is calculation of total income and tax liability in this part. So if all your four answers are right, then you will be rewarded with the 51 rupees. Yes. Okay, many people don't know the index number of 1213. 1213 index number was 200. 1213 index number is 200. CII 200. Salary standard deduction already done na, because I have mentioned the computed. Computed. I have mentioned about computed na. Done. So part 1, your capital gain is, your capital gain is 35,73,500, total income is 67,73,500, and your tax liability is 17,01,357. So it is, if it is transfer before 23rd July, then obviously indexation and all everything was there. Now if it is transfer on or after 23rd July 2024, then what will happen? So part B. So if we start with the part B, that is part B. So on 23rd July 2024, then what will happen? So computation of total income. First is a salary. So guys, your salary is 32 lakh. Now capital gain, but index not available here. So index not available. So full value of consideration 92 lakh minus cost of acquisition. You will take the original cost FMV as on 1/4/2001 or SDV as on 1/4/2001, whichever is lower, and here whichever is higher. So your cost is 5 lakh and here it is a 15 lakh and 12 lakh. So 12 lakh. So here it comes to the 12 lakh. After that, cost of improvement. Your 1/2 cost of improvement is 1 lakh and 12/13 cost of improvement is 5 lakh. So can I say that here it is a 74 lakh? So 74 lakh and salary income. So GTI or NTI is 1 crore 6 lakh. 1 crore 6 lakh. Now part B total income is 1 crore 6 lakh na? How you are 1 crore 69? 1 crore 6 lakh only na? Yes. Now tax liability. Now tax liability. So how you will calculate the tax liability? So guys, for the tax liability, we will write that is tax on LTCG. So here A is tax on LTCG. Is that conditions are satisfied or not? So first is that assessee is a resident individual or HUF. Asset is an immovable property and that asset acquired before 23rd of July 2024. If all the conditions are satisfied, answer is yes. How you will calculate the tax? Either take 12.5% without index or 20% with index, whichever is lower. So guys, without indexation, your capital gain is 74 lakh. Multiply by 12.5%. So it comes to 9,25,000. And with indexation, you calculated in the first part, you calculated capital gain with indexation only. So that is 35,73,500 multiply by 20%. 7,14,700. So here lower comes to 7,14,700. And B, tax on balance income. So guys, balance income taxable as per slab rate, and balance income, your tax is 772,500. 772,500. So guys, here 7,14,700 plus 772,500, it's 1487,200. So it's same 1487,200. But here there is a twist. It is the same, but here there is a twist. Here in the second case, your income is more than 1 crore. So indexation, that surcharge changed from 10 to 15%. So here you will take the add surcharge at the rate 15%. 2,23,000 and 080. And after adding surcharge, it's a 17 lakh 10,000 280. Just add health and education says 4%. So it comes to 68,411. 17 lakh 78,691. That is 1778 690, and it was 1701 357. Done. So this was the question. Guys. This is this will be uploaded in your drive also, so you can check this question. So today our whole lecture was only related to the computation of capital gain and only indexation, because I took like 2 hour and 2 hour approx only on this particular concept, because otherwise you will get confused in the future. Because for the exemption purpose and all, guys, this capital gain will be without indexation for the exemption purpose also. Because whenever you will calculate the exemption under section 54 like B and all, so for exemption purpose you will calculate the capital gain, that is without indexation. Done. Who did first, sir? Who is the winner of today? I have to check. Rahul Senthil says that, sir, here is surcharge, here marginal relief. I think it will not be applied. You can calculate. Then also I think there will not be a marginal relief here, because income is 1 crore 6 lakh. So there will not be any marginal relief, because on the tax, if you calculate the 5%, so there will not be marginal relief. No, you can calculate, then also there will not be any marginal relief. Okay, so who gave the first answer? So just I am telling you, the first answer is So first answer was from Abhirami. Abhirami. Abirami. Abhirami. So Abhirami, you can give your GPay number or UPI ID. You can give your GPay number or UPI ID, so you will get your 51 rupees reward. Done. So that's enough for today from my side. See you tomorrow. Tomorrow we'll continue with capital gain. Okay. Thanks a lot, people. Bye. Take care. Bye. And in the buyback of the share, what we have discussed till now? Yes. Good evening, everyone. So, in the buyback of share, this rule I have given you yesterday in the recorded mode. So hope so you have completed that lecture. Done. So guys, in the buyback of the share, when we were discussing about the buyback, then what we have discussed, there is a section 115 QA. And this 115 QA says that suppose if any domestic company goes for buyback, then in hands of the company, that company is required to pay the tax at the rate 23.296%. Now, how this 23.296% comes? 20% is tax rate, 12% is surcharge, 4% is health and education cess. So 23.296% is tax rate on the difference, that is buyback price minus issue price, and in hands of the shareholder, that is totally exempted. Now, company required to pay this tax within the period of 14 days from the date of the buyback. Otherwise, from the 15th day, there is a 1% per month or part of the month interest, as well as the assessee will be treated as assessee in default, and 100% penalty is applicable. 100% penalty may apply, like if assessee is in default and whatever outstanding amount, then on that outstanding amount, that AO may charge the 100% penalty. Now, guys, we have discussed one example yesterday. Suppose for an example, there is a one company, that BB Virtuals Private Limited. BB Virtuals Private Limited issue the 10,000 share at the rate 50 per share after some time. Suppose BB Virtuals Private Limited buy back the shares at the 5,000 rupees each. 4,000 shares buyback at 5,000 rupees each. So buyback price is a 2 crore rupees minus issue price is a 2 lakh. So 1 crore 98 lakh is chargeable to tax under section 115 QA at the rate 23.296%. This was the law till 30th September 2024. Now guys, what happened? Sir, normally why company do the buyback? Guys, you know that nowadays why company is doing the buyback? Because company just want to give the dividend, and instead of dividend, company were preferring the buyback instead of the dividend. Means I can take an example. Now this is the private limited company. Now in the private limited company, what happened? Suppose if they give the dividend to the BB sir, suppose I am one of the shareholder, I am holding the good amount of a share in this company. If they give the dividend, then you know that dividend is taxable in hands of shareholder, and dividend is taxable as per the normal rate, that is the slab rate. Dividend is taxable in hands of the shareholder as per the normal rate or slab rate. So suppose for an example, guys, here they have paid 2 crore rupees by way of the buyback, because buyback price is a 2 crore rupees. They buy back the share and they paid the 2 crore rupees, that is 5,000 rupees each for 4,000 share. And guys, they paid the 2 crore. Suppose for an example, just assume this 2 crore rupees, if they declared as a dividend, then what amount of tax government will get? This 2 crore will be taxable in hands of the shareholder. So it is taxable in hands of like BB sir at the rate 30% tax rate. My tax rate is 30%. Surcharge is also applicable at the rate 15% because income is more than 1 crore. And health and education cess is also 4%. So can I say that on this amount, it should be taxable in hands of the shareholder at the rate 30% plus surcharge 15% approx, like more than 1 crore income, then 15% surcharge. Health and education says 4%. So it comes to approx 36%. Means government will get the 36% tax now. But through buyback, you know that people were saving the tax. Because on the buyback, can I say that here SSC paid tax only at the rate 23%. Means company paid the tax at the rate 23%, so minus 23, so approx there is a 12.5%, 12.5% approx, there is a loss to the government. Because suppose instead of the buyback, if company give the dividend, then dividend is taxable in hands of the shareholder as per the normal slab rate. Normal rate, and my tax rate is the 30%. Surcharge is 15%, health and education says 4%. So approx there is a 35.88%, means there is a 36% tax rate. And instead of the 36% tax rate, I will prefer the buyback. Company will prefer the buyback. Because in the buyback, only on the differential amount, company is required to pay the tax only at the rate 23.296%. And in hands of the shareholder, it is totally exempted. In hands of the shareholder, it is totally exempted. Then there is a loss of approx 12.5 to the 13% to our government. So Nirmala Sitharaman ji realized that, oh, there is a loss. There is a loss. So what Nirmala Sitharaman ji did, you know that? Nirmala Sitharaman ji made the amendment, and Nirmala Sitharaman ji made the amendment in the Finance Act 2024. And in the Finance Act 2024, Nirmala Sitharaman ji says that when Nirmala Sitharaman ji presenting this bill on the 23rd of July 2024, Nirmala Sitharaman ji announced that I am going to remove this section 115 QA, as well as I am going to remove the section 1034A, and this both section will be removed with effect from 1st October 2024. So from 1st October 2024, this section 115 QA and section 1034A is going to remove. Means here section 1034A and 115 QA, normally what happened in case of the buyback, that earlier that buyback price minus issue price, on difference that company used to pay the tax at the rate 23.296%. Nirmala Sitharaman ji removed both section. Now guys, Nirmala Sitharaman ji removed this both section with effect from 1st October 2024, and Nirmala Sitharaman ji mentioned that yes, till 30th September 2024, this both section are applicable. But with effect from 1st October 2024, this both section are not applicable. And guys, if you realize now, then in our practical life, highest buyback in the listed companies also, in unlisted, though there is an unlisted buyback is always there, but in the listed companies also, highest buyback took place in the month of the August and September. If you see the buyback on the internet also, if you just search the buyback of the shares of the companies, then you see that in the month of the September and August, there are highest buyback. Just I will show you. So buyback dates. So if we see the current buyback offer, then guys, in the month of September, see, this is the buyback. This one buyback is directly on the Matrimony Company Limited. That is on the October 25. But see in the September. September 11, September 10, September 7, September 5, September 6, September 4, September 3. So in the September on the listed company only 1, 2, 3, 4, 5, 6, 7. There are 7 buyback. In the August, there are lots of buyback. Because August, if you see August 31, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 companies buyback in the month of the August. July 30th July there was one, and before that July 4 and July 2. So only July there was 2 buyback. In June, there was only 2-3 buyback. In the May, there was only 1 buyback. In April, there was only 2 buyback. In the March, there was only 2-3 buyback. So normally what happened in the every month, in the listed market, there are 2-3 buyback. But if you see the month of the August, then in August, there are 17 buyback. In the month of the August, if you see, there are 17 buyback. In the September, there are lots of buyback. In October, there is only 1 buyback. In October, there is only one buyback. So why, guys? Why? What is the reason? Reason is being the change in the law. Reason is being the change in the law because earlier on the buyback, that company is required to pay only tax at the rate 23.296%. That is buyback price minus issue price. On that difference, company used to pay the 23.296% tax, and in hands of the shareholder, it was totally exempted. Now, sir, what is the new law? That I will explain you now. Okay, what is the new law? Now, law is amended with effect from 1st October 2024. And now, what is the law? Now, law says that, suppose, now what is the law from 1st October 2024? And guys, from 1st October 2024, law says that, suppose if any domestic company buy back the share, if domestic company buy back the share on or after 1st October 2024, then guys, now they have introduced one section, that is the section 222F, and 222F is a dividend, deemed dividend. You know that we have discussed the deemed dividend under section 222A, B, C and D. That new section is introduced by Finance Act 2024. And this section says that, now suppose if any domestic company buy back the share on or after 1st October 2024, then guys, there is a section 222F, and 222F says that whatever money received on buyback, money received by the shareholder on buyback, that money received on buyback by the shareholder is treated as a deemed dividend, and guys, it is taxable under income from other sources in the year of the buyback. So all people pay attention. Now what is the law? Now law says that, suppose if any domestic company buy back the share on or after 1st October 2024, then section 222F is applicable. 222F says that whatever money received on the buyback, that money received on the buyback is treated as a deemed dividend in hands of the shareholder, and guys, it is taxable under income from other sources. 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 Sir, you are saying that whatever money received, is that total money received is treated as deemed dividend? Answer is yes. Answer is yes. Means whatever money received by the shareholder on the buyback, that is treated as deemed dividend and taxable under income from other sources. You may ask the question, sir, what about the cost of acquisition of that share? Because if I take this example, in the yesterday's example, guys, when company issue the share at the rate 50, so suppose I have subscribed the share at the rate 50. Now today there is a buyback, and buyback is at 5,000 rupees. So here buyback price is basically 2 crore rupees. I am just copying down this part. Guys, here buyback price is 2 crore rupees and issue price is 2 lakh rupees. Means my cost of this share is a 2 lakh rupees. My cost of this share is a 2 lakh rupees. So logically, I can say that logically it should be the 1.9 crore should be taxable under income from other sources. But here lawmaker says that no. Here guys, now Nirmala Sitharaman ji framed the law. Nirmala Sitharaman ji says that if there is a buyback on or after 1st October 2024 of the domestic company, then whatever money received on the buyback, that total money is treated as deemed dividend. That total money is treated as deemed dividend. Here total money is treated as deemed dividend. Here total money is treated as deemed dividend. Now total money is treated as deemed dividend. It means, can I say that here, suppose from this company there is a buyback in case of the BB, and suppose I am the shareholder. Earlier I purchased the share at the 2 lakh rupees. I purchased the share at the 2 lakh rupees and today there is a buyback at 2 crore rupees. So guys, lawmaker says that total 2 crore, this total amount of the 2 crore is taxable under income from other sources as a deemed dividend. Now you will say that, sir, okay, that 2 crore is taxable as a deemed dividend under income from other sources. Then what about our purchase cost? What about our purchase cost? So here lawmaker says that, okay, what about your purchase cost? Here capital gain will also apply. But how capital gain will be calculated? As per section 46A, capital gain is also calculated. And capital gain will be calculated, your full value of consideration is always nil. Your full value of consideration is always nil. And whatever the cost of acquisition of the shares, just reduce the cost of acquisition of shares. And guys, that share I have purchased at 2 lakh rupees. So guys, here there will be the capital loss. Here will be it will be a capital loss. Either it is a long-term capital loss or short-term capital loss. That depends on period of holding of that share. That depends on period of holding of that share. And guys, if there is a loss, then this loss can be set off against any other capital gain. But question is that, okay, sir, can we set off this loss against the IFOS income? Answer is no. Answer is no. Because if you remember from your intermediate, then guys, you know that in the intermediate, you must discuss that, okay, if there is a long-term capital loss, that can be set off only against the long-term capital gain. And if there is a short-term capital loss, that can be set off either against the short-term capital gain or long-term capital gain, but it cannot be set off against any other gain. So if there is a long-term capital loss, that can be set off only against long-term capital gain. And guys, short-term capital loss can be set off only against short-term capital gain or long-term capital gain. So there is an interesting treatment proposed by the Nirmala Sitharaman. Nirmala Sitharaman ji says that, okay guys, if there is a buyback, then in case of the buyback, whatever the money received, it is taxable under IFOS. It is taxable under IFOS. It is not taxable under capital gain. It is taxable under IFOS. So whatever money you received, it is treated as deemed dividend and it is taxable under income from other sources. And guys, here capital gain also apply. And your full value of consideration is always treated as nil. Cost of acquisition of share is whatever your cost. And guys, this remaining will be treated as your loss. It will be always loss. And this loss can be set off against the any other capital gain, or it can be carried forward for the 8 years. You got my point or not? Yes. So now what is the law? Now law is from 1st October 2024. Okay, if there is a buyback from 1st October and to 1st October 2024, that law is if there is a buyback, then guys, in case of the buyback, if shareholder received the money on the buyback, that money is always taxable under income from other sources. Always taxable under income from other sources. It is taxable under income from other sources. And guys, whatever the cost of acquisition of your share, means whatever at price you acquire the share, there may be possibility you acquire the share from market at premium, and whatever price you acquire, that will be treated as your loss and it can be set off against the capital gain. You got my point or not? Yes or no? Yes, yes, yes. Yes, Selva, you are saying correctly. Okay, here this total buyback price they are treating as a deemed dividend, so it is taxable as per normal rate 30%. And that loss is allowed. That is allowed only at the rate 12.20% or 12.5% loss is allowed. Na? So our Nirmala Sitharaman ji can do anything. So this is the law, and this is very interesting and very important for your examination. Okay. So let's start with the taxation in case of buyback by domestic company, with effect from 1st October 2024. So now what will happen from 1st October 2024? In hands of company, there is no tax treatment in hands of the company. In hands of the shareholder, they have introduced one section 222F. And guys, remember, against this 222F deemed dividend, any expenditure also not allowed. You know that normally against dividend or deemed dividend, expenditure is allowed. That is 20% of expenditure is allowed, and that is interest is allowed. You know that we have discussed under section 57 of IFOS. If you remember, then we have discussed under income from other sources, there was section 57, and that 57 says that against the dividend income, that expenditure is allowed, only interest expenses is allowed up to 20% of dividend. Guys, you know that there they have mentioned other than referred under section 222F. So other than referred under section 222F, other than referred under section 222F, so other than referred under section 222F, so other than referred under section 222F, it means against buyback, that any expenditure is not allowed against that dividend. So here, all people focus here, what this section says, try to understand. In hands of the shareholder, any payment by company on the buyback of share shall be treated as deemed dividend in hands of shareholder, and it is taxable under income from other sources as per the normal tax rate. So it will be taxable as per the normal tax rate. Now, buyback is treated as extinguishment of the right. So capital gain is applicable as per section 46A in hands of the shareholder. Now, computation of capital gain, how you will calculate the capital gain? Full value of consideration always nil. Guys, if here buyback price is written na, then remove this word. If here this buyback price is written, then just remove it up. So your full value of consideration is always nil. Your cost of acquisition of share, it will be your short-term capital loss or long-term capital loss. And guys, your period of holding will be date of acquisition of share till the buyback. After that, one example is given. I request you to read this example and check it. That example is correct or not. Just check it. Done, people? Say done. Done, sir. Okay. Now here also in the next page, if that full value of consideration is always nil, here buyback price is written, then just remove it. If buyback price is written, then just remove it. If buyback price is written, then just remove it. Done. Okay, guys. Now here on the page number 1, when we have started the buyback, then taxation in case of buyback, what happened? Here they mention that in case of the company, there is no tax treatment and full value of consideration minus cost of acquisition of shares. And here one note is given where shareholder receive consideration and it is treated as deemed dividend, then full value of consideration shall be treated as nil while computing the capital gain. Okay, guys. So can we create one chart, and from the help of that chart we can understand whole buyback actually what will happen. So here you can copy down this chart. If you have the space, then you can copy down on this particular page. Okay. So let's understand one chart, and after that we will wind up this topic buyback. Okay, guys. So let's create one chart. Okay, what will be the tax treatment in hands of the buyback? So one is let's start with the buyback of shares. Buyback of shares. Now, guys, there are two parts. Suppose if there is a buyback by the domestic company, then what will happen? And if there is a buyback by the foreign company, then what will happen? There may be possibility I am holding share of the Meta or foreign company, any foreign company, Tesla, and there is a buyback, then what will happen? So guys, let's discuss first that is foreign company, but that will not be like examiner will not ask for the examination. Okay, suppose if there is a buyback by the foreign company, then what will happen? So guys, if there is a buyback by foreign company, then normal rule will apply. Means in hands of company, there is no tax treatment. In hands of company, there is no tax treatment. But in hands of shareholder, obviously capital gain is applicable. In hands of shareholder, capital gain apply. And how you will calculate the capital gain? Whatever the full value of consideration minus cost of acquisition of share. So here it is a long term or short term. That depends on period of holding. So that is in case of the foreign company. But suppose if any domestic company buy back the share, examiner will ask you about the domestic company. Okay, if any domestic company buy back the share, then what will happen? So I'm just dividing this in the two part. One is the buyback till 30th September and one is the buyback with effect from 1st October 2024. So one is the, suppose buyback up to 30th September 2024 and one is the buyback on or after 1st October 2024. So guys, if there is a buyback till 30th September, then in hands of company there is a tax. But in hands of shareholder, it is exempted. So here, so first is buyback up to 30th September 2024. Then I can say that in hands of company, section 115 QA apply. See, from this year there are amendment in between the year. So in your batch, we will be having 2-3 extra lecture. Normally I complete the batch in 78 lecture, but in your batch there will be approx 80 lecture. So here section 115 QA apply, and as per section 115 QA, whatever buyback price minus issue price, here company pay tax at the rate 23.296%. Here company pay tax at the rate 23.296%. Now in hands of shareholder, it is exempted. In hands of shareholder, it is exempt under section 1034A. It is exempt under section 1034A. Now guys, in hands of the company, what will happen in case of a buyback on or after 1st October 2024? So buyback on or after 1st October 2024, then in hands of company, there is no tax treatment. But in hands of shareholder, there will be a two treatment. One is the total buyback value is treated as deemed dividend, under section 222F and taxable under IFOS, taxable under IFOS, and second is capital gain is applicable, and here full value of consideration is always nil and minus cost of acquisition. So remaining is your either short term or long term capital loss. Done. So just copy down this part. First copy down this part.